Alright, guys, as we just said yesterday, China isn't going to take this lying down. We have entered the true start of decoupling. This is the beginning of the economic apocalypse. And let's get you up to speed. Trump has imposed an additional 10% tariff on Chinese imports coming into the United States. And that's on top of the insanely high tariffs from the first trade war and Biden's punishments. So tariffs on EVs are now 110%. Solar cells are now 60%. Chinese steel is taxed at 35% today. The US basically wants to end trade with China and hurt their export economy. Well, Beijing will have none of that. We have mentioned many times that China simply can't back down and let Trump steamroll over the country. It's not just a matter of pride here, it's a matter of economic survival, it's a matter of showing strength to the global south and BRICS. You can't be a global power if you get hit without giving a response. China has now officially retaliated against Donald Trump's tariff war. The star of The Apprentice has hit against a brick wall. China's Mr. Big is not going to back down from this one. China today is very different from 10 or even 5 years ago. China has a robust economy backed up by cheap Russian commodities. They have control of critical supply chains and a global majority as trading partners. There's a reason why Trump initially clobbered Canada and Mexico with a 25% tariff, because unfortunately they could be pushed around thanks to their dependency on the US consumer market. It's not a very complex situation. China, however, is very different. 2 decades back, the US accounted for 21% of China's total exports. But ever since Trump's first trade war in 2018, Beijing took that warning very, very seriously. They started to diversify their trade aggressively. They started trading more with Russia, Asia, and Latin America. And last year, China's exports to the US stood at only 15%. But here's the important part. Trump and friends can't reduce their Chinese imports to zero. It just can't happen. Because if he did, the US economy would collapse in a hurry. Every single American, well, they're going to pay the price. Just in Walmart alone, 80% of goods sold are from Chinese suppliers, less than 20% from American producers. And this is what happens when companies endlessly chase profits. Trump's 10% tariffs will be passed down to the US consumer. And if he goes pedal to the metal with a 60% rate, household budgets in the United States will collapse. China knows this as well. They have a big leverage. Remember what Trump promised to the voter base, that inflation will come down. But if there's another cost of living crisis, his support will start to evaporate. It's important to realize why China has to retaliate. The underlying sentiment in Washington against China is full on containment. Just listen to Rubio's opinion on China, and it's obvious to anyone there's simply no reverse gear left.
We welcomed the Chinese Communist Party into the global order, and they took advantage of all of its benefits, and they ignored all of its obligations and responsibilities. Instead, they have repressed and lied and cheated and hacked and stolen their way into global superpower status, and they have done so at our expense and at the expense of the people of their own country.
If you're sitting in Beijing, you know the US is only going to keep pushing their luck. Biden's semiconductor curbs is just the appetizer. Donald Trump is now serving the main course. China not fighting back and rolling over is a lose-lose strategy for them. Trump will keep pushing and forcing more concessions from them. Now, they have imposed a retaliation tariff on 15% on US coal and LNG, cutting away energy exports. And it's no surprise that it's China's first step. Thanks to sanctions on Russian energy, Beijing is winning big. They have an unlimited amount of cheap Russian gas and LNG on hand. In addition, China's trade relations with Australia, they are mending and they're still strong. And that's where they get the majority of their LNG supply. 34% of total supply comes from Australia, 23% from Qatar, and over 10% from Russia. US LNG is only around 5 to 6%, so it's no sweat off China's back. However, it would impact the US economy. The Chinese economy is the world's biggest energy importer, so this 6% is still quite significant. Now, slapping a tariff on their US energy supply is essentially a cutoff. Chinese traders would dump their American supply for alternatives. And with Chinese demand gone, Trump would have to squeeze his biggest buyer to import even more LNG. So the biggest victim would be the EU. China's tariffs more or less confirms Trump you have to pressure Europe to buy even more now. From a geopolitical perspective, this isn't a good move. It pushes the EU towards economic collapse and fractures the G7 alliance further. And these are the second order effects of China's retaliation. Now, Trump has mentioned how he wants to expand US LNG exports, but as Chinese demand drops, projects will get even harder to finance in the short to medium term, and it's likely China would simply make up their shortfall from Russian gas. Apart from LNG, China also imposed a 10% tax on US agricultural equipment. Now, this isn't a big sum by any means, but it does indicate that US agriculture is on the radar, they're on the chopping block. This 10% tariff is also a move by Beijing to be more self-sufficient. We'll have more domestic industries, they'll swoop in and fulfill this demand easily. And as China begins to grow more food, we can expect them to decouple from US exports as well. In Q1 2024, China cancelled over 500,000 tons of wheat imports from the US, the highest for the last few decades. Even before the tariff war, China is already relying more on domestic food production, or they could always import cheaper grains from Brazil. This isn't good news for US farmers. Profits are starting to drop and lower grain demand from China, they're going to squeeze their margins even further. This is the weak spot of the US export economy. In 2022, net farm income came in at $182 billion, but in 2024, this will fall to just $140 billion. It's a brutal 23% drop. And thanks to higher inflation, thanks to higher salaries and more expensive equipment, farmers are paying more and they're earning less. A tariff war with China definitely isn't a good idea at all. And if we look at many of the headlines in mainstream media, it looks like China's retaliation isn't big at all, it isn't enough. That either Beijing is restraining themselves or they are terrified of Trump. Now, on the surface, this looks to be true. China's tariffs only targeted $14 billion worth of US goods, while the US punished over $500 billion, half a trillion, worth of Chinese exports. But we mustn't forget about the dynamics of tariffs, and let's ask a fifth grader here. Who actually pays for tariffs? It's the US consumer themselves. The damage falls on US companies importing the goods and people most likely paying at the counter. The companies will pass on the extra cost to them. China not matching the US also helps to prevent an inflation shock to Chinese consumers. They are strong enough, at least for now, to resist the temptation. Furthermore, by starting at a low bar, this gives room to China to ramp up the pain. Over the next few months and years, Beijing can target even more US imports. They have around $160 billion worth to hit back on. So China isn't really in a hurry here. They are probably busy finding alternative suppliers for the rest of the list. Decoupling is just getting started. Now, if Trump gets the hint, the best move right now, right here, right now, is to simply backtrack and rescind the 10% tariff. De-escalate now before it's too late. And let's understand the risk of a full-blown China retaliation. Their economy is becoming self-sufficient and Beijing is ready to launch a tsunami of stimulus. And throughout China's supply chain, we'll see businesses and entrepreneurs jump in to fill in the gaps. Trump shouldn't be worried about China's initial tariff rate. He should be terrified of complete replacement. And these are the top US exports to China: soybeans, electronics, crude oil, aircraft parts, vehicles, and corn. Do you all see a common theme here? All of these categories are imports that China is working to actively replace either through other suppliers or by going local instead. Just like the semiconductor sanctions, this is going to force China to do a nationalistic push for self-sufficiency. But it will be magnitudes worse because it's now across the board, not just confined to chips. So how bad is this for the US? And let's start from a high-level view first. What is the macro impact for Trump's economy? A 10% tariff on China would shrink the US economy by $55 billion, and that's if China retaliates with equal force, which they haven't yet. So yes, if you live in the US, You can breathe easy for now. The pain is very minimal. But what have we seen over the last 3 years? It's one escalation after another. So we have to brace for impact. Even if China withdraws their tariffs tomorrow, it doesn't mean it's over. They can simply cut supply completely next month or next year. And this chart shows us the amount of US jobs supported by the top exports to China. How many jobs are supporting $18.5 billion worth of goods? The biggest exposure belongs to agriculture, nearly 180,000 jobs in oilseeds and grain alone. If Chinese students pulls out of the US, education jobs will get hit, 120,000 of them. Cutting away machinery, semiconductors, cars, and energy would mean the end of another 100,000 jobs. So there is collateral damage. It's impossible for the US to replace Chinese demand quickly, especially when they will overtake the US as the biggest consumer down the road. But let's go micro now. Which states within the US will get clobbered the most? Not every state will suffer. New York, for example, will be fine because they are dominated by Wall Street, but others will hurt more. And here's the list of the biggest victims: Texas, California, Louisiana, Indiana, and Illinois. These states export the most to China. If we see a full tariff retaliation or complete cutoff, job losses here would be concentrated. Now, this is the impact of a tariff war. Now, sure, Washington might be calling the shots, but it's the entire country that will pay the price. The tariff war has to stop, or massive layoffs will come sooner or later. However, China's retaliation isn't just restricted to exports, and this is where Trump lacks imagination. When you wage economic war, it's multi-dimensional. The biggest crack in the US economy is the debt market. Congress just can't stop spending, which puts them in a quandary. Major banks are already saying US bond yields are very low versus the inflation risk and fiscal balance. What does a tariff war with China cost? It jacks up inflation across the board, especially in consumer goods. If things get bad enough, the 10-year yield might fly back above 5%. It could even hit back to 6%. Remember, this is independent of the Fed rate cuts. So how does China play into this? Well, they have nearly $800 billion worth of US bonds. Beijing can choose to either deleverage and walk away forever, or they can start dumping actively. Will other countries come in to save the US? And at this point, we really don't know. After Trump's tariff shock, countries will be afraid, they'll be wary of holding US debt, especially when they could be trading much less with the US in the near future. And I hope this gives you a complete picture of China's retaliation. What we are seeing is just the tip of the iceberg. And once again, we must remind ourselves, silence does not mean compliance. This is just a warning shot to the US economy. It's just a preview of things to come. But as always, let me know what you think. What else does China have in store for the United States? Will they cut away all US imports in the years to come? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.